Welcome everybody. Thank you for joining us again. And just to reiterate, this is strategy number 4 within our strategy series. Now, the first 3 strategies that we've covered, just to recap, are using pure moving averages, in which we're only looking at price and moving averages to try and identify some trading opportunities or some trading execution strategies. We've done 2 that make use of the Telegram high probability opportunities, and then the last one we introduced in strategy 3 was a all-in-one or all-inclusive execution and risk management style, that for those of you that don't want to make use of the Telegram but would rather find or identify trading opportunities in yourself, a trading strategy that allows you to do so. Okay, so what we're going to start doing now, guys, is still using moving averages. We're going to show a strategy that incorporates another trading indicator, first of all. And second of all, what we're going to do is just introduce to you a secondary technique of moving average crossover. And by that, I mean the moving average crossover doesn't necessarily have to be on the price chart. We can use it or incorporate it within a indicator. Okay, so the first one that we've got, guys, is a stochastic oscillator. Just going to pop that up a bit. And for those of you that have been with us before, you will know that we generally use this as a source of probability. So when I say a source of probability, guys, what you can see here is opportunity that illustrates trading opportunity. So there's 1, there's 2, and on the bottom side we have 3 trading opportunities there. Okay, now those trading opportunities all indicate a probability. So anything above 80, that means we're looking for a short, and anything above 80 would indicate that we have an 80% probability of being correct if we were to go short. Likewise, if we were to go to short on this particular instance, we would have an 80% probability of being correct if we were to take that trade. When we are below 20, we reverse that. So 100 minus 20 again gives us 80. So if we were to go long, we would be 80% probability correct if we were to go long. Okay, so you can also see, guys, if I hover on those, it'll give you a varying probability. So let's just hover on here quickly. You can see a timestamp here. It says stochastic. It gives the time and the date, and it gives signal 89.4870. That suggests to me that I have an 89.48 or an 89.5% probability of being correct. Likewise here, we can see we've got around an 80.55. My crossover happens here. So that's around a 77% probability, and so forth, guys. We can generally go throughout and look for those opportunities. Okay, now the last one we're going to do, you guessed it, a moving average, and here I'm going to use a period 10 moving average, and I also want that to be a simple moving average. Okay, and that I'm going to incorporate onto the price chart. Guys, again, the template is on the attachment below. So if this is a strategy that you like, you can just simply download that template on your MetaTrader 4. Okay, so there's a couple of nice things about this particular strategy, guys. Again, I think it's best used with high probability opportunities. It allows you to execute on the lower time frames, although the trade identification comes on those higher time frames. Okay, so if you don't want to go through the identification, again, those high probability opportunities every day are highlighted to you on the Telegram channel, and you can use this particular strategy for a execution. The nice thing about this strategy, guys, is that it gives you multiple opportunities to get involved. All right, so you might get 2 or 3 opportunities on a 5-minute chart if you want to go that low, and you may get 1 or 2 opportunities on a 15-minute chart. You can even sometimes find an opportunity on a 30-minute chart. All right, so it's not like you're sitting here in front of the screen waiting for that once-off opportunity, and when it goes, and you've missed out for the day. There will be multiple opportunities to get in on various time frames. Okay, so that is an added benefit of the strategy. And just like the first 3 strategies, guys, it has got a added risk management system where we are able to identify stop losses and take profits using support and resistance levels, and in conjunction with a 1R or a 2R method to identify take profits. And we'll go through some of those examples shortly. And last but not least, because we are using the moving average in a alternative way, you almost have a double confirmation system, and we'll go through that shortly. Okay, so the first one I'm going to show, guys, is the pound against the New Zealand. This is a 5-minute chart, and as you know, on Friday we were looking for opportunities to go long in this particular pair. So first thing that we have to do, guys, we've just identified it. We are looking for attractive probabilities. Okay, as you can recall, we're looking to go long. So there's one there. There's a second opportunity there to go long. Okay, in both instances, my stochastic is below that 20, which would indicate that I have more than an 80% probability of being correct if I go long. Remember, we've already identified the opportunity on a higher time frame. Okay, so your lower time frames, you can use that probability as you like, because in my mind, we're getting into a nice high probability opportunity anyway. Okay, now this is where we find it quite interesting, guys. I use this stochastic as a moving average crossover. So we've covered this a couple of times. The blue and the red line, guys, on the stochastic, those are essentially moving averages, and a moving average there for me does suggest that I have an opportunity. All right, so I'm going to be using those particular crossovers as moving average crossovers to get into a trade. My double confirmation system comes in the form of price closing inside the moving average. Okay, so if we are going long, I want price to close inside, so I'm inside the purple moving average line. If I'm wanting to go short, I want price to close inside the moving average. Okay, and what you'll find, guys, with this double confirmation system is that this particular crossover and this close inside should happen not simultaneously, but very roughly the same time. All right, so there'll be a couple of candles out. Now, it's not a case of always we closing inside the moving average and then the moving average crossover. It may be the other way around, but what you'll find is it'll become similar. What you don't want is for a moving average crossover to occur around here, but your candle to only close inside there. There's a disconnect there. Okay, so keep that in mind, as it is a filtering system for your trading. Okay, so let's identify a long trade here. We can see two things as we've seen. We've seen a candle close within. We've already identified we're looking to go long. And here we can see that moving average crossover. Okay, now, as you can see on this particular candle, happened within one or two candles of each other. At this time, guys, you are encouraged to open a trade at the very next candle. So in this instance, I'm going long at 191.36. I'm going to round it down to 191.35 just for ease of calculation. And again, just like always, our stop loss is going to be below the previous low for a long trade and above the previous high for a short trade. And again, the reason why we do that, guys, is because we're using recent key support and resistance levels to identify that opportunity. So in this instance, I'm just going to use 191, guys. That gives me a nice even number. Okay, so it's around 35 points. And we can just write that down for you quickly. My entry equals 191.35. My stop loss equals 191. So that gives me 35 points. If I'm looking to do a 1R, that would mean I'm doing 1 times 35, which gives me 35 points as my take profit. Okay, so hence the reason why we're looking for our R number. All right, so let's take that out and pop our take profit on there, 191.70. Okay, so we had a beautiful trade here where we were able to make those 35 points within probably 30 to 45 minutes. Okay, now this is again now the beauty of the situation, guys. Let's just say you were in a meeting, let's just say you were in the shower, whatever you may be. Unlike other strategies, there will be a secondary opportunity, whether that be on the 5-minute chart again, such as what we can see here. There's my moving average crossover. There's my histogram close. And this already, guys, gives me a nice opportunity. Okay, so 91.64. There's a 9. So this one would have given you 20 points. Okay. Alternatively, you can just pop onto a higher time frame as we discussed earlier, and instead you go onto that 15-minute chart because you've missed the opportunity. And what you can see here, guys, is something very, very similar. We have the moving average crossover, and here we have the candle close before or inside. Okay, so roughly the same candle there and thereabouts. So what do? We open the trade, and as you can see, the last trade was at 10:30 a.m. This one's an hour later. So here we have 91.76. Let's call it 1991. So we're looking for around 75 points. That would be around 92.40, 92.50. And there you have that 75 points on the 15-minute chart. Okay, so this was a long trade and a longer wait. Okay, so let's go on to the most recent short recommendation we had, and that was the DAX on the 3rd of September. And again, guys, the 5-minute chart will often give you 2 opportunities during the course of the day, whilst a 15-minute chart or sometimes even a 30-minute chart will give you a secondary or a third opportunity to get in. Okay, so there you can see we're above 80. That tells me we have a higher than an 80% probability of being correct. All right, at the same time, guys, we're looking for a close below price, and you can see prices hovering around that moving average. So what we can do is we can find, there's the crossover. I would say that that was our close. So my entry at 134.28, let's call it 134.75. 134.30 or 134.25, and there you can see just above that recent high 134.62. Okay, so let's just pop that in here. Entry equals 134.30. Stop loss is 134.60. So the difference there is 30 points, guys. That's an R. Therefore, my take profits, I'm looking for 30 points. Remember, this would represent my R number. So 1 times 30 is 30. Therefore, my take profit is 134.00. And we can just pop that in now quickly. And there you can see, relatively shortly after we've identified that opportunity, we get closed out at take profit. So a great trade. Now again, just like the long, if you had missed that opportunity, guys, you'll get a secondary opportunity often on the 5-minute chart. So don't be too beat up about it. Okay. Alternatively, you can pop onto that 15-minute chart, and you'll get something very, very similar, guys. You go through this same mechanism. Okay, so EMA crossover. Here you have the candle close. You get in at the very next candle, which is around here. We have a stop loss just above the recent high. So in this particular case, 134.65 to 134. So you're looking for 65 points. So there within sort of 2 hours, you got your 65 points. Okay, guys, and you can keep on going. If you missed the 15-minute chart, you've missed all the 5-minute chart entries, you'll often find a 30-minute chart opportunity here. And again, you just go through the same strategy and you repeat it, and eventually you'll get into a trade for the day. Okay, guys, so that is strategy 4, a different way of using a moving average crossover by incorporating it into our stochastic and using the moving average within our price chart as just the double confirmation system. Beautiful strategy, guys. If used in conjunction with the Telegram channel, much like strategy 1 and 2, it allows you a pretty interesting way of executing a trade, knowing what you're looking for the day. It's got a built-in risk management system, and that allows you to have a stop loss and a take profit. And I think that you'll have a lot of success with this particular strategy. Alrighty, guys, so thanks for joining us. Please do tune in again for strategy 5.